Good morning. It is Tuesday, the 26th of January, 2021. Bitcoin currently sits at $31,800, which is a 4% reduction from yesterday. The volume is at a whopping $58 billion, up 5% over the last 24 hours. And this is the Bitcoin Briefing, a daily news show focused just on Bitcoin, providing information for the Bitcoin community. Okay, so let's get started with the first and biggest news of the day. Harvard University, Yale University, and Brown University have been discovered by CoinDesk to have been investing in Bitcoin over the last 12 months at least. Now, in 2018, they were investing in some blockchain venture capital companies. We've known about that for a long time, but what we didn't know was that they were actually buying Bitcoin for their investment portfolios, presumably over the long term, on Coinbase. This marks another pretty big wave, really, in this institutional buying phenomena that we're seeing at the moment. Perhaps possibly started by Michael Saylor and MicroStrategy, Square and PayPal. It looks like the universities are in now, Wall Street's in now, family offices are in. It's all coming, and it's happening fast. It's a bit worrying, really, because I think for those of us who have been in this space for 4 or 5 years or even more, you know, okay, maybe if you've been here for more, you've managed to fill your bags. But for those of us that got in at about 2016 and later, I don't think anyone has enough Bitcoin. So I think I wouldn't be alone in saying that it would be quite nice to keep the Bitcoin price below 40K for a little bit longer so we can all accumulate before it just starts getting far too expensive. Okay, so let's have a look at this news article. Some of the largest university endowment funds in the US have been quietly buying cryptocurrency for the past year or so through accounts held at Coinbase and other exchanges, CoinDesk has learned. Now, this is interesting because Coinbase seemed to be doing a huge amount of institutional buying. They were the broker that Michael Saylor had used to acquire his billions and billions and billions of dollars worth of Bitcoin, or at least that's what it's worth now. According to two sources familiar with the situation, Harvard, Yale, Brown, and the University of Michigan, as well as several other colleges, have been buying crypto directly on exchanges. Yale and Brown did not respond to the request for comment at the press at the time. Well, I mean, that's quite clever of them. They've obviously kept their purchasing of Bitcoin under wraps. I don't know why anybody, especially an institutional investor, would want people to tip their hand, would want to tell anyone else that they're accumulating Bitcoin until they have fully filled their bags. And at that point, the right thing to do would be exactly what Michael Saylor is doing, which is hit those podcasts every single day and start promoting the coins. All right, so that's quite an exciting first piece of news. I mean, look how far we've come. I remember in 2017, 2016, the idea of a university or large companies buying Bitcoin seemed absolutely laughable. It was, even though many of us retail investors could see from a philosophical point of view that this currency is huge and really represents many things that are important to us, like freedom and sovereignty. The idea among institutional investors on Wall Street types, they had nothing but contempt for Bitcoin and most other crypto projects. They all seem to be spouting the same mantra: Bitcoin bad, blockchain good. But we're now starting to see a huge reversal in that. In fact, I can't remember who said it, but it's been said a lot, that if in 2016 you were buying Bitcoin, you could have easily lost your job. Jamie Dimon had said any of his traders at JP Morgan who were buying or trading in Bitcoin or had any exposure at all would be fired. And now, only 4 or 5 years later, it's quite the reverse. If you're a trader or a money manager and you don't have exposure, or you're not giving your clients exposure to certainly Bitcoin or Ethereum, you could lose your job now. It's changed a lot. But, you know, this brings a whole new set of challenges to us in the community. It's been volatile enough and the market has been manipulated enough by just individual whales and people with large stacks. Now we are entering a new phase where we have extremely sophisticated, highly liquid investors that are coming in and I don't. It's not really part of today's topic, but something to look at is how JP Morgan, when it started investing in silver, really manipulated the whole market, and it's never recovered since. So on the one hand, for those of us that are holding decent Bitcoin bags, it's only going to increase the price. However, we have these whole new games to look forward to on a level and sophistication that I don't think we've seen yet in the market. Nevertheless, I suspect a lot of these holders, certainly the universities and MicroStrategy, PayPal, Square, and others, are holding for at least 5 years. So let's see. Okay, so moving on, we have the ex-CEO of Goldman Sachs who says, if I were a regulator, I would be hyperventilating at the success of Bitcoin at the moment and be arming myself to deal with it. He does say at the beginning of the clip, and I'll play this now.
Lloyd, you also mentioned the other main phenomenon on Wall Street right now, which seems to be Bitcoin, which seems to be going mainstream. You have big firms now getting involved in ways that they didn't. Have your views either evolved or changed around the future of Bitcoin and crypto?
Look, I've always been, I'm not, it could work. It could work. But really, at the end of the day, a currency is supposed to accomplish a couple of things. It's supposed to be a medium of exchange and a store of value.
He does say that Bitcoin may work, but brings up the point that a currency must be a store of value and a medium of exchange. And because Bitcoin is so volatile at the moment that it is no longer, or never has been, suitable as a medium of exchange, this for me seems like quite a tired argument really, because yes, Bitcoin is very volatile, but it's an emergent money. And when it stops being volatile, it will no longer be as good an investment as it is at the moment. So no, okay, he's maybe right. Fees are too expensive, and confirmations do take a while. I know this is something that the Bitcoin cashers will be very validated to hear, but for me at least, and I can't speak for all of you, I have PayPal and Visa and all these other stuff, and when I want to buy coffee, I can buy it very, very quickly. I would much prefer to buy it on the Lightning Network if the facilities and infrastructure around that is available, but it's not right now. What I, on the other hand, do need, and I think we all do, is a strong store of value. So yeah, we've been robbed through inflation. Most people don't even really realize. And there is an exit ramp, which is Bitcoin. And regardless of the fact that you can not spend it as easily as you can spend with your card at the moment, it doesn't mean that this isn't a huge black hole that is just sucking up the world's value, and is going to continue to do so. Because as soon as people realize what the government are doing, and then they realize how Bitcoin is the solution, you would have to be an idiot to, or at least incredibly ignorant, and just refusing to see that this is the solution to the money problem.
So that's the conundrum that Bitcoin will have to deal itself out. If I were a regulator, I would be kind of hyperventilating at the success of it at the moment, and I'd be arming myself to deal with it.
How much longer can we allow these governments to just keep inflating away our wealth? One thing that is very interesting about this is the level and quality of the stature of these people now that are weighing in on Bitcoin. We have these universities, as we've just mentioned. We have the ex-CEO of probably the most powerful bank in the world. We have the Bank of England, who's recently been weighing in on the situation, declaring that Bitcoin and digital currencies were not built to last. And finally, we move to Grayscale, who's added another $120 million worth of Bitcoin in its institutional holding accounts. Grayscale, PayPal, and many other companies that we probably don't know about are buying more Bitcoin every day than are minted. What's so crazy is we have all this evidence now that all of these companies, Grayscale, Bitcoin, PayPal, MicroStrategy, who knows, could be many, many, many others, Square, family offices, all of them are buying Bitcoin and just completely wiping out the new daily supply. It's insane to me that people right now are having weak hands and selling, because it's quite obviously going into their pockets. The macro case for Bitcoin has never, ever been stronger. It hasn't changed since earlier in the year before we had the boom. Smart money is now moving into the investment space, and after this price drop, people are just selling to them. Don't sell, don't give them your coins. You know, I mean, who knows how long we're going to be at this 30 to 40 range. We could even go lower. Who cares? It'd be quite nice actually, because we'll be able to get some more. But once it starts going up to 50k, 60k, 100k, 200k, most of us, me certainly, just can't afford to buy any meaningful amount of Bitcoin anymore. The opportunity is over. I remember buying Bitcoin, $100 would get me a shitload of sats. And now, very few. Well, I mean, hundreds of thousands of sats, but you know, a lot less. And it's only going to get worse. So, I mean, part of me hopes, or knows at least, that Bitcoin is going to go a lot higher, and you know, hopes that the investment will work out. But on the other hand, when you start thinking about this as future money, and they've been such a scarce amount, it does make you wonder that maybe this is the last opportunity to buy anymore. So, you know, well, you don't need to take my advice, but the thing that I'm doing now is I'm just buying as much Bitcoin as I possibly can, and I will continue to do so. We were in this space longer than these bankers, and I think it would be a great tragedy if they price us out of it and steal our coins with a bit of manipulation and, you know, 20-30% price crashes, which are completely normal. I would recommend to you all, if you're thinking of selling, just zoom out on the charts. This has all happened before. Okay, so this was episode 1 and a preliminary start to this new channel, the Bitcoin Briefing. Check in every day for the latest news and discussion around the topic, around our favorite topic and the future of money and freedom, which is of course Bitcoin.